that the Fed increased the Fed funds rate 75 basis points or 0.75%. And what I'd like to do is kind of fill in some other holes and talk about how this connects to the overall global picture. Michael Shotnick with Sierra Pacific Mortgage, here to hopefully help you gain some insight and be a resource for you. So as mentioned in the statement up here to my side, Lawrence Young, Chief Economist for the National Association of Realtors, had a handful of really good points. The Fed funds rate is worth paying attention to, but over and above that, activity we've seen that directly affects my business, your business, is associated with long-term rates. As the Fed's been increasing the Fed funds rate 175 basis points, the 30-year fixed has increased about 300 basis points. So what that means is we've gone from 3% interest rates to 6% interest rates about the same amount of time. So the anticipation by Lawrence Yoon is sales will slow down to about 2019 levels. Rental demand will increase. So as the cost of housing will continue to increase, price points are high, rates are increasing. We're going to see more rental demand, a lot of pent-up demand going into rentals, which eventually I think will probably purchase homes. We'll probably be on this trend until we see inflation top out. That's where the Fed funds rate really has an impact, is by trying to get on top of inflation, controlling the cost of goods. That is ultimately when we'll see this incline in overall costs, and at a point probably plateau and come back down in interest rates. And that's where I think those individuals that maybe had to look at renting may come back into the buyer pool. So I don't think this means depreciation in the market. However, it does mean a more stable market, which ultimately I think is a pretty good thing.